7 months ago, Rob Barron said this about Tesla stock. He says, quote, "It's going to go up huge. Now is the bottom." Since then, Tesla stock has went up over 100% and likely is going to go up even more in the coming weeks. Here in this video, I will go over my expectations for Tesla stock over the coming weeks, what I'm personally expecting, and what I'm doing here. Now, Tesla stock was up 8.19% in regular trading, up another 0.7% in after-hours trading. So the momentum just continued throughout the end of the day. Now, yes, you did get a little bit of a sell-off. Tesla was up about 10.5%, but that is to be expected when you are going through a short squeeze. You're going to get big volatile up moves and big volatile down moves, sometimes within the same day, and sometimes percentage points can be gained or lost in just minutes, sometimes seconds. First things first, it is a Saturday, so there is not much news to cover, but I will give you the latest. It does appear that FSD 12.5.6.3 is now starting to roll out to customers. Bentley, owned by Volkswagen, says their entire car lineup will now go fully electric in 2035 instead of 2030. Fundstrat said yesterday, Tom Lee says that Tesla is undervalued. Take a listen to this if you did not hear this.
It's a company that to us looks undervalued because people look at it as a car maker and look at current margins and earnings. But as we know, there's a lot of new initiatives, whether it's robotaxi and robots, and now of course there is a political angle that you guys well discussed tonight. It's a company.
And Tom Lee did go on to say there that the political landscape has definitely improved for Tesla since Trump will now be the 47th president of the United States of America. And I don't think there's a more simplistic way to say it, an honest way to say it. Tesla has so much opportunity ahead of it. It is most likely still, even at current prices, the most undervalued big tech stock that we have, because valuation is based on what's going to happen. What has already happened does not matter, right? What happened last quarter does not matter for Wall Street. It's all about what's going to happen next. And if Tesla is going to be even mildly successful in FSD and Optimus, the stock is undervalued as far as today. Now, it does appear as if Wall Street is starting to discount further down Tesla's growth curve. They're starting to discount better deliveries for 2025. They're starting to potentially discount some FSD, some AI-related endeavors that Tesla is doing, but you're not even close to fully pricing that in. Now, when you do fully price that in, Tesla is going to be a multi-trillion-dollar company, and it's going to take some time to fully price these things in because they still are out a ways. But especially as we head into the end of this year, there's a very strong case for Tesla, as Tesla is going to grow deliveries, as Elon Musk said, 20 to 30%. The first robotaxi rides will take place next year, with maybe some limited selling of Optimus to warehouses or something along those lines. At that point, you really can start to price in more of what that growth will look like for robotaxis and Optimus, and it looks good as of right now. The only thing that could be negative, from my opinion, my perspective, for Tesla is if the economy does weaken. I think that's the one thing the markets are not putting enough weight on. We've all come to this conclusion that we're going to have a soft landing, when in all reality, that is not a conclusion at this point. That is not a certainty. There is a chance the economy does weaken, and that would be problematic. Even consider governments spending less money is great long-term for America, but short-term, it does not help the economy because the government spending, deficit spending, is at recessionary levels. It's been a kind of stimulus to the economy for a long time now. If you start to take that away, that could be a problem. Now, actually, over on X, I shared something from Morgan Stanley. They say, we modeled 60% tariffs on China and 10% on the rest of the world. All at once, we estimated that policy would boost core inflation by roughly 0.9% and reduce GDP growth by around 1.5%. A more phased approach, and one that may be more targeted, would imply smaller effects because they would be spread out over time. With an already robust economy, moderate tariffs would hurt growth, but not necessarily cause a recession. That could be the biggest wild card of 2025. How much does the economy grow? Does it grow less than expected, more than expected, or do we actually enter into some kind of recession? That does not seem super likely at this point, especially with a Trump presidency. If rates do come down more, if we do have lower inflation, which I believe we will see, allowing the Fed to cut rates, that could offset some of the maybe less favorable aspects of a Trump presidency, which could mean tariffs and less government spending. From an investing standpoint, less government spending and tariffs are not exactly great for your portfolio. They're not exactly the best thing for markets. So to offset that, perhaps you could see lower than expected inflation, allowing the Fed to cut rates more, and that could offset some of those negatives. And as Jerome Powell said yesterday, inflation is not really the driving factor, or inflation expectations are not really the driving factor right now for 10-year treasury yields and why 10-year treasury yields are going higher. It's actually better real growth that is being implied for the economy, meaning that the Fed will just not need to cut rates. And that's why Wall Street has been pricing in less cuts from the Fed. But if inflation does start to undershoot the Fed's target in early mid 2025, then that will allow the Fed to cut rates more. Even with a strong economy, that would be the perfect setup for Tesla in 2025 and really the broader markets. With all of that said, ladies and gentlemen, let's take a quick look at Tesla from a technical perspective. Now, the technicals really tell the whole story, okay? Because a lot of people, bullish and bearish analysts, they have their own commentary and opinions on a stock, but the charts, the technicals don't lie. It's just a fact. What is the stock doing? Oh, here's what it's doing. Tesla stock broke out above $300 per share. Specifically, once you broke $300 per share, you are up about 7%, a little bit over 7%. That is a solid breakout. Okay. Now, could you fall back to $300 per share? Probably. And I expect at some point we will trade between 330 and 300 on the high side and on the low side over the next coming weeks. There will be a bit of a cool down in Tesla, as well as the broader markets. I mean, markets have just taken off following the Trump win here. And I don't know exactly what's going to cause markets to come down. It could be bad tariff policy, headlines, commentary. Who knows? There could be a black swan event. But I do expect some downside in the coming weeks, some consolidationary downside, not sell-off like downside, but consolidation. Then once we get into really late November, December, that's probably when you're going to start seeing some of that chasing take place. We have to remember there's over $6 trillion of cash on the sidelines. Most hedge fund managers are underperforming the S&P. And we just got a lot of good news, okay? Trump's president, favorable business policies, as long as inflation, doesn't go higher or there's bad tariffs that come about, that looks like a positive for the markets. The markets have spoken, the technicals have spoken. That looks good. We just got big tech earnings out the way. Were they perfect? No, but they were pretty good. Yes, expectations were low, but they were still pretty good. We just got the Fed out the way. That basically said the rise in 10-year treasury yields as of lately is not concerning. It would be concerning if they stayed there. And Jerome Powell basically said he's not concerned about inflation at all. So 3 major things that have recently taken place for markets. We've also gotten a lot of economic data over the past 2 weeks that has been pretty good. right? Economically speaking, the data has been pretty good. Inflation, not so much, but it's not a huge problem at this point either. So I see a lot of tailwinds from the events that have already taken place, and not a huge reason for decline in markets. Now, if you start to see economic data come in weak, that is likely what would give you some of that consolidation. Now, it is also possible that Tesla stock continues higher another day or two and makes a higher base around the 350s and then falls back to consolidate perhaps around the 330s. The reason I say this is because Tesla is now overbought on the RSI. Tesla is now at 76.33, but here's the deal. Tesla doesn't tend to stop there, right? Once it gets overbought, that's not when the stock stops. It's usually in the 80s to even, low 90s, where Tesla starts to slow down its momentum rally. And you are currently in a short squeeze. Okay, that's what is going on. We'll look at the data here in just a moment, but this is a short squeeze. And from, relative strength measures like the RSI, history would tell us we could still have quite a few big days left in the tank for Tesla. And also, not just the technicals that show us that, but also the data. If you just look at how many shares are currently sold short and the positioning as of even Friday, there's a lot a lot of shorts that could still cover on short positions, and probably should. Let's just be honest. On Friday, you did have about 950,000 shares that were covered on. You had return shares of 2.18 million, borrowed shares of 1.23 million. That means almost a million shares were covered on Friday alone. Short interest of free float sits at 2.84%. That's actually a rise from where you were late October at about 2.66%. You currently have about $25 billion sold short in Tesla stock on a dollar amount, level. And you currently have about 79.22 million shares that are sold short. So 79 million shares sold short is not a, small number. Even if you've seen 20 to 30% of shorts close out of short positions, which there's a strong case for that to happen at this point, that would likely drive the stock up quite a bit. Now, what I will point out is volume has started to spike, kind of like a straight line here. You went from 69 or 69 million in volume to 165 million in volume, down to 117 million in volume, and on Friday you were at 203 million for volume. Now, Tesla stock can go up still on, lower volume days. Like this day, you were up 14, almost 15% on November 6th, and you had 165 million for volume. The next day later, you were up 3% and only had 117 million in volume. So I don't think volume is one of those things that you should hold your hat on to say low volume means the stock falls or high volume means the stock goes up. That's not necessarily the case, and you could still see more volume come into Tesla. Pretty consistently back in early 2023, you were seeing 300 plus million for volume. At least 200 million for volume was not an uncommon occurrence during that time, and some of the biggest volume days were 600 plus million, right? 670 million or so in volume. So you definitely could see a larger rally in Tesla from a more tactical perspective. But when you look at the fundamental backdrop of why people are getting excited about Tesla, again, all of the things I've mentioned throughout this video, it's very exciting. Right? You can justify trading the stock or buying the stock at these current levels. Now, I'm not buying the stock at these current levels. I've done a little bit of buying, a couple shares here and there in different accounts, but nothing too major. On any correction in markets that we do get, that's where I will be going more heavily in Tesla. I just hope between now and then, Tesla is not a $500 stock by then. Okay? Because I think at some point in 2025, Tesla will be a $500 stock. And I think that is coming. It could come sooner than a lot of people think. in all actuality, by the end of this year, Tesla could be a $500 stock, just depending how many shorts cover and what kind of news flow we get between now and then. But at some point in the first couple of months in 2025, I am expecting some kind of growth concern correction. I think it's only logical that you will get a period in time where the economic data will start not looking as good. And when that happens, that's when markets may start to bring up more of those recession concerns. But from now to year end, that just does not look likely. So let me know what you think about this information down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.